Now today is boot camp day 3, one of the most important boot camps by far. We're going over sticking to your plan and how to actually make a plan in the first place, what the plan for, and what rules do we need to stick to. Because I always say stick to your rules, stick to your plan, but how do we figure out what the plan and what to stick to? Because there's rules, but you might not even know that there's what rules there is and stuff like that. So let's go right into the video. Now, the plans and the rules that I'm going to be talking about in this video applies to me because these are my plan and this is my rules. Now, first things first, if you're waking up 2 minutes before the market opens, you're not prepared. So it's literally about preparing yourself, and this is the plan. The plan is to prepare yourself. Now, the way that I do it is I have something called a pre-market plan, a pre-market game plan. Now, for today, for instance, if we look at this, it says December 22nd. That is today. I make 3 things on that thing to plan out my day to see what is going to happen for the day. The sentiment is basically analyzing pre-market and the day before's price action and like maybe the entire week's price action to see how it's looking compared to today. Then I read it. Market run and pre-market. Could see continuation today with individuals like Tesla and Nvidia. Just be careful as today is the last trading day before the holidays. Today didn't look like much. It didn't look like anything. That's why I didn't take a trade today. And then I list out the economic events. The last thing you want to happen is for you to be in a trade. Next thing you know, the market absolutely dumps if you're in calls or absolutely rips if you're in puts because you didn't know that there was something happening at 10 o'clock or 10:15. So this is why I mark it. I don't care what's happening. All I want to know is what the time is. Then top key levels that I'm looking at for the upside or downside or whatever it is. These are the top key levels that I'm looking at. Today I was looking at Nvidia 500 and Tesla 260 to the upside. Neither one of them hit at all, nor did it get there. So, just because I have those does not mean that we're not looking at something else, because we also have my watch list. As you guys can see, here's my watch list from yesterday. I posted this at night. Nvidia and Tesla. These were the only things that were looking good. Usually I have SPY, usually I have Qs, but they didn't really look nice, so I couldn't plan for them. And then I had to wait until the morning to plan for them. And then here is the watch list. Now, that's our plan. That's our plan for going into today, are those key levels. Now, if something sets up intraday, obviously we could take it depending on how price action is, but that might be a little bit too advanced right now. That is my plan. Now, that's our plan before we get in the trade. What's our plan going into the trade? What's our rules going into the trading day? Now, for me, I take anywhere from 1 to 4 trades per day on average. It's closer to around 1 to 2 trades per day. Now, I don't want to speak too much on risk management, but that is part of your plan. That's part of, your set of rules that you have when it comes to actually trading. Now, a lot of people don't want to risk more than 2% of their account per trade and stuff like that, or per day. So we'll just leave that as that. I'll be making a video on that in probably bootcamp day 5 or something like that on the risk management. But for right now, that could be your set of rules. Now, 1 to 4 trades per day. Don't revenge trade. That's sticking to your plan. That's your set of rules. Not revenge trading. Don't over trade. That's why I trade 1 to 4 things, because I only trade the best setups. Now, a lot of people, they don't know what the best setups are, so they just start trading everything. This break, this break, this break, this break. They don't see those A-plus setups. So that's why you want to limit how many times you trade, so you can really see what is the best trade that I could take. And then you could fill one of those slots by taking the best trade instead of thinking that you have unlimited trades. The next thing is the plan when you're in the trade. Your stop loss, right? What is my stop loss? Every single trade that I get into, I know what my stop is before I get in. I'm risking anywhere from 5 to 8%. So if you have $1,000 position size, you know you're going to lose anywhere from $50 to $80 per trade on average if this goes in the opposite direction. So you need to know that, and you need to be okay with that, and you need to know every single time that you get into the trade, you could potentially lose $50 to $80 every time you take the trade. Knowing that, your mindset should automatically be like, okay, I'm okay with taking that $50 to $80 loss. I'm okay if it hits my stop loss. So this is why you have to be picky with the trades you take, because you know if you take it, there's a risk that you're going to lose money on this trade because it's not a 100% win rate, and nothing's guaranteed besides what you can control. And you can control you losing $50 to $80, but a lot of people don't sell when your stop loss is there. That's what's wrong with a lot of people when they first get started. But that mindset should help you when you're in the trade or right before you're about to get in the trade, whether or not you should take this. Is it worth me risking $50 to $80 on this trade, -5 to -8% on my position size for this trade? So then that's your plan. Then once you get in, that's your stop loss. I kind of plan out my take profits depending. I usually look for $1 plus on individuals. So like if I get in at this 497 break, I'm getting out at 498 plus, or maybe like a little bit before. It all depends on price action, but I'm usually aiming for that $1 plus, at least a 1-to-1 risk to reward. I love a 1-to-2, 1-to-3 risk to reward, but at least that 1-to-1 risk to reward. And that's our plan. Now, sticking to the rules, once your stop loss hits, your stop loss hits. Don't get greedy, because this thing could just keep going up and up and up. You're not supposed to catch the whole move. You're supposed to catch a good amount of it. You're supposed to catch what was part of your plan. And my plan was to sell at that 499. Why? Because it came up. We're close to this 500 key level right here. It's a little too dangerous for me to hold it like that, especially off open like that. Just to break 500 like that would have been insane. So that's why I sold at 499, and then I was waiting for another move. If this had momentum to continue above that 500, I would have been in that, and that would have been the second trade I would have took on that day. But I only took that one trade because it was too close to that 500 key level, and it was off open. It definitely needed a pullback, and I didn't want to be a part of it, and that's exactly what happened. And then it just never broke 500, and then it tried again and never broke 500. You need to plan out trading. You need to have these rules set in stone. You know, how many trades you're supposed to take. What's your max loss on the day? You know, if you have a $10,000 account, what's your max loss? You know, people say -2%. So if you lose more than $200 on a day, that's your max loss on the day. Once that's hit, you got to have enough discipline to get off the charts. And then after that, you wait for the next day. Now, you can't hesitate, you can't get emotional, and that more so comes down to like your mindset and stuff like that. But these are literally just having the strict rules intact. Once it reaches like 11 o'clock, I'm done. Why? Because your probability of a continuation of any single move significantly decreases after the first hour of trading the way that I trade. So that's my set of rules. After like 10:30, 11 o'clock, I know it's probably done. Now, sometimes I'll take a trade at 3 o'clock. Sometimes I'll take a trade at 12 or 11:30. But more than likely, I'm done, because I know that's my set of rules. I know that probability definitely decreases depending on how this price action is moving. But that's another set of rules that I place on myself. Now, this video is probably a little bit shorter than every bootcamp that I've done, but I just want you guys to have the proper plan and the proper set of rules in order to start trading. Now, this was mainly a introductory to that, because every single video after this will be adding to our rules. But you need to know that you need a set of rules and you need a plan. And I just went over examples of what my rules and my plan is every single day. Bootcamp day 4 coming out tomorrow, and I'll see you guys there.